Hey everyone, welcome back to our channel, Investment 101. Today, we're diving into a hot topic, interest rate cuts and how they might impact your investments, especially in the world of real estate investment trusts, or REITs. Let's get started. The Federal Reserve has been closely monitoring economic data, and while inflation is slowly decreasing, they're likely to wait for more consistent data before making any cuts. Some analysts predict that a rate cut could happen later this year, possibly around September. So, what does this mean for investors? Lower interest rates generally benefit REITs by reducing borrowing costs and increasing property values. This makes REITs an attractive option if you're looking to invest in real estate without directly buying property. Now, let's talk about some top Singapore REITs you might want to consider. Here are a few that analysts are recommending for 2024. Far East Hospitality Trust CGX, Q5T dividend yield, 6.5 ROE, 5.2% gearing ratio, 33% book value, SGD 0.72 per unit, price to book PB ratio, 0.85 business locations, primarily in Singapore, focusing on hospitality assets like hotels and service residences. Keppel REIT CGX, K71U dividend yield, 5.8 ROE, 4.8% gearing ratio, 38%. Book value, SGD 1.3 per unit, price to book PB ratio, 0.95. Business locations, commercial properties in prime business districts in Singapore and Australia. Lend-Lease Global Commercial REIT CGX, Chu dividend yield, 6.2 ROE, 6.0% gearing ratio, 35%. Book value, SGD 0.9 per unit, price to book PB ratio, 0.88. Business locations, a mix of retail and office properties in Singapore and Italy. Mapletree Industrial Trust CGX, Mi8U dividend yield, 6.7 ROE, 7.1% gearing ratio, 37%. Book value, SGD 1.6 per unit, price to book PB ratio, 1.05. Business locations, specializes in industrial and data center properties across Singapore, the United States, and other regions. Mapletree Pan Asia Commercial Trust CGX, N2EU dividend yield, 6.4 ROE, 6.5% gearing ratio, 39%. Book value, SGD 1.2 per unit, price to book PB ratio, 0.92. Business locations, a diversified portfolio across Asia, including Singapore, Hong Kong, and China. These REITs are trading at attractive distribution yields of 6.7, making them a solid choice for income-seeking investors. Remember, it's important to consider your risk tolerance and investment goals before making any decisions. That's it for today's video. If you found this information helpful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching and happy investing!